Hey guys, welcome to Real Estate with Ryan. This is the 4th episode, and I'm interviewing Patrick Francey. So Patrick, tell me about yourself aside from real estate.
Aside from real estate, well, I'm a business owner. I'm a coach in the personal and professional development space. And so I own a number of businesses. Well, I say a number. I've been an entrepreneur for 45 years. And one of the businesses I own is a retail business that is aligned with one of the things that you do. So I own a business in Edmonton called Pro Skate, Professional Skate Service. I own another company called the Real Estate Investment Network, which teaches people how to invest in real estate. And I work really closely with Alfonso Quadra, who is, of course, who supports you and your parents in your real estate journey with Wealth Genius. So I collaborate with Alfonso on that. That's a number of things that I do. I've been married for 35 years. I'm a grandfather of 2 amazing grandkids, 8 and 9 years old. And what else do you need to know?
I heard you're very good with figure skaters.
I'm very good with figure skaters, yes. I've developed a lot of fitting techniques, sharpening techniques. And so my wife is an Olympic class mental and, I'll say it this way, a world and Olympic class mental performance coach. So she works with a number of ice dancers and was actually, she's a way bigger deal in the skating world than I am. Although I own Pro Skate, she is a coach and works with, like I say, a number of world and Olympic class athletes.
That's great. I'm a figure skater myself.
Yes.
How did it occur to you to start investing?
Well, I was a business owner for so many years, and one of my mentors, said to me, at some point in time, you're going to want to exit your business, and that's great. But if it doesn't go the way you want it to go, you can't rely on that. So as a self-employed individual, I don't have a pension plan. So what is your pension plan? So that was one of the tweaks that I had. I go, okay, I got to invest for the future. So then one of the other things that I realized is that, the people that I admired, that I looked to for guidance and thought were really great at what they do, many of them were business owners because that was my interest. But I noticed that regardless of how successful they were in their business financially and how much money they made in their businesses, totally unrelated to real estate, they all invested in real estate. I went, wow, if it makes sense for them, that may be something I should consider.
That sounds great. Could you define what a pension plan is?
Oh, a pension plan, at some point in our life, we come to a place where working doesn't necessarily make sense for us anymore. I'm 67 years old. I still work because I love to work. I still love to do things, be a contribution, but I have a different context for wanting to work and working at this point in my life. But I have now, because I invested in real estate, I invested in different asset classes, I'm in the choice of whether I want to work or not. So a pension is future income when you're not working a job. So you are preparing for the future inevitability, because inevitably you're going to quit working. You're going to not be able to physically, mentally, whatever it might be, and you've worked hard. You want to take some time and enjoy it.
Yeah, absolutely.
Pension is what supports you in doing that in the future.
I understand. I'm just going to move this. What's your buy criteria? What do you buy?
Well, right now, at this phase of my life, I'm actually not adding to my real estate portfolio. I'm actually carving some away, taking some off, really keeping what I want that's going to support what I want to do. So, in other words, for me, my buying criteria was initially single family, and then I expanded to say, well, I want duplexes, triplexes, and then I got into light industrial. So, my buying strategy was what is going to serve me into the future. Now, it's a great question that you asked, by the way, because a lot of investors get in trouble not having a clear reason. Like, what is it I want real estate to do for me? So, for example, the mistake that's commonly made is they buy, or they invest in a buy and hold property thinking that the cash flow is going to support them today. It's just not. That's a real myth. Cash flow in a property today needs to go back into the property to maintain it and go through all this, insure it. Inevitably you're going to have to put a new roof on it. So your cash needs to stay allocated to that particular property. If you want to make income today, you got to change your strategy. So if I was making an income from real estate, which I never did, that was never my goal. So that wasn't part of my criteria. So if I was going to have a criteria for making income today, I would do fix and flip. I would do BRRRRs. I would do rent to own. So that's a different strategy. Buy and hold is for future income, more along the lines of a pension. In my context, that I hold buy and hold, whereas active income is generated by doing something that's going to drive income. I'm going to renovate and I'm going to flip that property and make some profits.
That was a great explanation. Thank you. When did you start investing, and how's it going as of 2025?
Well, interesting question. I took a long time to get going. I didn't actually buy my first investment property until I was 40 years old.
Really?
Yeah. And, over the years, because I had business, and again, I wasn't driving income. I was actually taking my business profits, or some of those business profits, and investing them into my future, which is where I'm at today. So imagine me at 40 years old going, gosh, what am I going to do when I'm 65? I'm thinking about retirement. What am I going to do? Well, here I am at 65 years old. Well, now I'm living off some of the income that I generate from real estate. I live off the income I generate from my existing businesses. One of my businesses, I literally haven't had a key to that business since 2005. Yet I draw income. I'm an absentee owner. I draw income every month. And so real estate for me is a way to continue to kind of just slow down. I don't have to worry about dollars and cents per se. I have to manage my portfolio well so it continues to churn that cash. I'll give you an example. I just sold a property that I wasn't really happy with. It became vacant. It was a single family that I'd bought early on. So imagine I bought a property when I was 40-ish years old. I paid $135,000 for it. It cash flowed for the past 20-some years. And I just decided I'm going to exit that property. I'm going to sell it. I don't want to go renovate it. Tenants moved out and all the rest of it. I sold that property and I put $350,000 in my bank account.
Wow.
I go, well, that's pretty cool. It's a nice little income to have. I started that journey when I was 40 years old. So what did real estate do for me when I'm 65 years old? Actually, 67 years old. Well, I put $350,000 in my bank account. Now I'm going to put that somewhere else, and it's going to churn revenue. So I'm going to put that $350 to work somewhere else, and it's less labor intensive. I don't have to worry about it. I'm going to put it somewhere that this pays me a simple 10, 12%. That's it. That's easy.
Yeah, money works for you.
It works, yes.
That was great. How would you define money? Like what money is?
Oh, that's a big question, especially in this day and age. You as a young man, you're going to be looking at money through a whole different set of eyes than, I did growing up. Today we have fiat currency, paper money, which is this agreement to say this has value.
Yeah.
Well, guess what? We've been printing it. And so when we look at what fiat currency is valued today, is a number of dollars that have been printed. It's devalued. It's decoupled from the system. As a matter of fact, as we're doing this interview, it's just been announced, I think it's called the Genius Act in the U.S., which is going to be about stable coins. So we're morphing towards digital currency. So what is money? In reality, if you want to get to the bare bones of what money is, gold and silver is actually the only money, real, true monies. People have problems with that because, certainly silver has an industrial application, but gold is true money. There's a story about gold, and it goes like this. Back in the 30s, if you owned a piece of gold, it was worth about $30. Okay, in fiat currency. But always back then, an ounce of gold would buy you a nice suit, a great dinner, and a night out at a hotel. And that's what that piece of gold would buy you. Well, come ahead, 80 years, 70 years, 80 years, and guess what that piece of gold will buy you? A fine suit, a wonderful dinner, and a great hotel room. Now, what does that mean for you in the question you ask of what is money? I had that ounce of gold. If I had that ounce of gold in the 1930s, for example, that's what would buy me, and to this day, it would buy me that. But if I had a $20 bill at the same time in 1930, that $20 bill would buy me a lot of groceries. What would it buy me today? A couple of cups of coffee at Starbucks. So you start to see that the actual money, what we call money, fiat currency, has devalued, whereas real money, called gold, has continued to stay with the rate of inflation.
Yeah.
Does that make sense?
Yeah, absolutely.
So what is money? That's what money is to me, is assets, hard assets that are outside of regular fiat system.
Yeah, I read this book recently, and it explained that in like early, maybe 1800s-ish, aluminum was valued at like 20 times the value of gold. So it definitely changed over time. But yes, a lot of precious minerals do that.
Yes, precious metals are always, and commodities, minerals like you're talking about, uranium and aluminum, steel. But we always come back to the one thing about gold is it can't be reproduced. It cannot be manufactured. It has to come from the earth. And so it can't be replicated. That's where the alchemy, the term alchemy was about, can I take lead and turn it into gold? No, nobody's figured that one out yet.
Yeah, absolutely.
There was a time where beads were fair exchange. But then they realized that those could be duplicated. We can counterfeit beads. And so gold can't be counterfeited.
Yeah.
Yes.
How do you evaluate risk versus reward in a deal?
Well, there's a risk versus reward is, there's, when you're going through the risk versus the reward, you look at the downside and you look at the upside. So if the downside outweighs the upside, you have to ask yourself, am I willing to take that risk? Then you have to break it down and ask in the context of probability. So there's risk, and the downside's really low, like really high, or it's bad. Let's put it a different way, okay? So I don't want that downside. Then you ask yourself, what's the probability of that downside? Then you start to weigh it that way. Then the other side is, what's the probability of the upside? And then you start to balance it out. And then whatever your comfort level is, when you go through and make sure that you're looking at data, not emotion, because people get very emotional when it comes to money. It's a very emotional topic. And we can get caught in shiny things. Oh, you can make a lot of money and it's going to be easy. Emotionally, that drags us in. That's where a lot of risk lives, is in the emotion of it. So, the wisdom that I've gained over the years, because I've made so many mistakes, expensive mistakes, was I realized in reflection how much of my decisions were meant without doing the research and getting the data so that I could pull the emotion out of it. And sometimes the data doesn't align with the excitement and the emotion, and so you back away. Or you get into it without checking the data. So that's the game that you got to play. So when I'm looking at risk, I want to make sure that I'm looking at data. I'm weighing the upside against the downside. I'm looking at probabilities and deciding if the probability is high enough that I want to take that risk.
I'm sorry. Yeah, that's great. Do you invest with partners or go solo?
I've done both. For me, what I've learned over the years is that my preference is not to have partners. Now, it's taken me a long time to figure that out. And it wasn't that was all bad. It's just that what happens is we get into partnerships early on. The key to a partnership is to have a clear exit plan. Here's what happens, Ryan. When you have partners, you go into it with the best intentions. What happens over time is life. Let's say I invest with Ryan. He's now, you're 14 years old and you're in it for the long term. But you've saved some money and you say, okay, Patrick, I want to invest with you. And I say, okay, let's do it. Well, life happens. And all of a sudden, Ryan is 14, then he's 18, then he's 25. Now I'm a lot older. You're wanting to get married. And then you say, oh, okay, well, no, I want to get out of this partnership.
Yes, there's
Maybe the timing's not right. but you still want to get out. I don't want to get out. It's not the right timing. So it's not to make partnerships wrong, because they can be very powerful. But the mistake that I've made, and I've seen many make as a coach, is they don't have a clear exit strategy. So plan the divorce in advance. That way you don't lose relationship.
Yeah, that makes a lot of sense. Plan the divorce ahead of time. That's a great explanation. What has been your most successful investment so far?
Oh boy, I'll share with you what I call my $1 million accident. I made $1 million by accident, and I joke about that, but it really is a little bit about that. When I bought a light industrial property, it was way out of my comfort zone, and so I was putting my store in that, my retail business in that particular property, and I wanted to buy the property. It was $500,000. It was just way more than I could wrap my mind around. This was like literally in the early 90s, long time ago. And so, but I wanted the location. So I chose to lease it from the builder. It was a brand new building. And I just arbitrarily, with no, I don't know why I even said it. I said, I can't afford to buy it right now. Can you give me an option to buy it? And the guy said, yes, 100%. I'll give you the option to buy it. He wrote an option, but here's the option he gave me.
Awesome.
He gave me the option to buy it 5 years later when my lease ended. So follow the plot. So I leased the property for 5 years. At the end of that 5 years, I was intending to lease. I have learned a little bit about real estate. They doubled the rent. I'm going, well, that's crazy. I'm not going to pay double the rent. I didn't want to move because it's a great location. It's now an established business. But in the back of my memory, I said, you know something? I think I had an option to buy this. Well, guess what? I dug in my desk drawer and I found this magic piece of paper. The magic piece of paper said, I have the option to buy that property to $500,000. It was in a very good, it's still in a great location in Edmonton. That property in that 5 years had gone, in terms of value, to $1.5 million.
Wow.
Because it was an awesome location. So I own that property today. I've refinanced it once before. And it's I want to say it's still probably worth about 1.5 now because of the economy and all the rest of it. But I actually bought that property and I pulled money off the table the day I took possession of it. And so, anyways, that was my accidental $1 million wins.
And that's amazing. What trends are you seeing in the market right now, and where?
Well, as of right now in 2025, the trends are really shifting in the real estate market in Canada, well, actually globally. And, prices are escalating. Affordability is a huge issue. People can't buy their first home. They can't afford to. That's really some of the opportunity that lives in real estate as a rental housing provider, being able to, because those individuals still need a place to live. And sadly, although affordability doesn't allow them to get in and own their own home, it just means for us, we're investors getting the education, being sophisticated in our thought processes, we get to be the rental housing provider for those individuals. So, aside from immigration that are coming into the country, there's a lot of people that live in this country, and again, it's a global phenomena, that affordability has gotten out of hand, and so they're going to need to rent. So as an investor, I want to be the rental housing provider.
Yeah, absolutely.
What is that?
What? Sorry.
Yeah, right.
What is your advice for me today to be successful in the future?
Oh, Ryan, you're already on such a cool path. I know you, and I met you, and what excites me about what you do is that you're a skater. I love that. I love young athletes that are forging their way because I think it's important. It's a discipline. You learn habits and discipline and how to look after yourself mentally, emotionally, spiritually, all those things. And you're immersing yourself, and you're hanging out with your parents. You're coming to these investment events and learning about real estate and real estate investing. But it's not just about that, by the way. At your age, you're learning, you're absorbing, but you're learning how to interact with people. In your case, you're interacting with adults. You're learning how to be, a good interviewer, and go on YouTube and put content out there and drive your YouTube channel. In the meantime, you're understanding the discipline through your athleticism, because that's the same level of discipline it takes to be successful in business. So your discipline of how you eat, how you train, how you work out, all the things that you do, how you show up for your partner, understanding that you have a partner. That's what you do, right? So you have to learn how to communicate, how to be respectful of your partner, listen to your coach. It means you're coachable. So those are what you're learning, and what you're doing is how you need to operate in business. It takes the same level of commitment, same level of discipline, same level of learning and training and coachability. So you're setting a foundation for yourself to be very, very successful into the future for whatever you do. And by the way, Ryan, it may not be real estate. You'll take whatever you do. You can apply it in any aspect of business, in any aspect of investment. Right now it's real estate, and that's awesome. But you could expand into Bitcoin. You could expand into precious metals, into the equity market. And who knows what's going to evolve in 10 years when you're 24 years old. It could be a whole different world, given what's happening with stable coins and given what's happening with cryptocurrency. We're going to a digital currency world, and you get to embrace it, learn, and then take what you've built a foundation in your training and apply it in business.
Awesome. I'm just going to cut this. I'm going to ask a question. You can promote yourself. Are there any businesses that support your investment journey?
Well, all of my businesses support my investment journey. I'm also, along with my wife, we work in the world of personal and professional development. So we have our own YouTube channel, and I'm a podcast host for the past 8 years of The Everyday Millionaire and Mindset Matters. And so those, under the umbrella of The Everyday Millionaire, we do Mindset Matters every week with my wife. And we do some YouTube stuff. Mostly it's audio, and we do a little bit on YouTube. But my point is that the coaching that we do also supports what we love to do, and that is support the success of others. And I recently coined a phrase in the mindset world called the Mind Shui way. Mind Shui, which is a play off the word feng shui. Have you ever heard of feng shui?
It rings a bell.
Okay, so feng shui is a thousands of years old Chinese methodology, thought process that you take your space that you live in and you align it so it flows really well. So the external world impacts your internal world. So how you arrange your furniture, how you arrange your bed, it's a way of operating within your environment, which gives you internal clarity. I look at that word feng shui, which is how you do your environment. And then I said, well, this is really what the work we do around mindset is really like mind shui. It's about how we clear the clutter in our brain so that we have the power and the clarity to move forward with energy and with flow. And so mind shui was a play off the word feng shui. So we then turned it into a way of being. Mind shui is a way of being. It's a way of thinking. It's a way of self-awareness. Think about what you're thinking about, clearing the clutter of your mind so there's good flow, good energy.
That sounds great. I love the play on words.
Yeah, it's fun.
And this will be my last question. Is there any book, resource, or person that has influenced you that you would recommend to others?
So many books. I think, even on my podcast, The Everyday Millionaire, I often ask my guests, what is their one book that had an impact on them or that they give. And, there's one book that always comes up, and it was by Robert Kiyosaki, Rich Dad, Poor Dad. That's a classic. But the book that really launched me into a way of thinking was called The Wealthy Barber.
Okay. Sorry?
The Wealthy Barber.
Oh.
And once again, I just can't think of the author off the top of my mind, but I've had him on my stage over the years. But the point is that Wealthy Barber and Rich Dad, Poor Dad, I think were very instrumental in shifting my thought process. Along the way, I've read maybe many others, but it's books that stand out for me. Tools of Titans. Tools of Titans was a really, really great book, as well as Extreme Ownerships. Extreme Ownership, where you take and you hold yourself, and you are accountable for what your life is or isn't. So our life is a reflection of the decisions we make. No excuses, no blame, no complaints, 100% responsibility for what you have going on in your life. No excuses.
Absolutely. Thank you so much for joining me, Patrick.
That was fun. Thanks, Ryan.
Thank you.